what we've determined is by extending this lateral, we think we can access up to 2 million barrels of oil equivalent. So very significant number for one wellbore. And that's obviously completing that longer interval with the acidization. So from an operational perspective, there's clear reason to go forward with this. We think we'll have substantially higher reserves than just producing the wellbore as is today.
All right, welcome back inside our proactive newsroom. And joining me now is Colin Harrington. He is the CEO of Zephyr Energy. And Colin, it's good to have you back again. How are you?
Very well, Steve. How are you doing?
I'm doing well, thank you. And well, you've had some significant news over the last couple of weeks, so that'd be a great opportunity to catch up on what's been going on because you've been extremely busy. You've got some news out, redetermination news, and maybe you can explain this. This is also to do with having this credit facility, right?
Sure. Yeah. Yeah. This is related to our senior debt. We have two forms of debt in the company. We have term loans, which amortize every month and get paid off over a defined period of time. And then we have a revolver, which gets on a regularly scheduled basis. The bank runs an assessment and does evaluation of those assets. So we've just been through that process. Our bank is a century-old commercial lender in the Williston Basin. They've been around a long time. We really like working with these guys. Their engineers will go wellbore by wellbore across our portfolio in the Williston, sign an evaluation, and typically regulated banks in the U.S. will lend up to 50% of what they perceive the value to be of those wells, considering commodity prices at the current moment. So we've been through that process. We're under the 50% threshold. We've now had that redetermination done. The only change to the facility is that the interest rate's been lowered from 11% to 10%. So we're really thrilled with where this has come out. It's good to have the process done. And as I said before, we valued our partnership with FIBT. They're a great lender, really know the area well, and we look forward to doing more with them.
Yeah, and you save a little money as well on that little per annum interest rate cut too, which is pretty positive.
Yeah, it's always nice. So it's a $15 million facility, a 1% cut saves you about 150 grand a year. So always nice to see that.
Absolutely. I want to ask you about some news that you had last week, and this is your recommendation. The board agreed with it about drilling a lateral well. Let's talk through this. This is a big step for the company moving forward.
Absolutely. And as you remember, we've been undergoing a very detailed and exhaustive evaluation process. We drilled the well into the Cane Creek Reservoir and went about 130 feet into the reservoir. We stimulated with acid, and we had a really good response. So we've spent the last few weeks, months, really looking at this from a subsurface standpoint, a reserve standpoint, and certainly running the cost to see what it would take to drill about 5,500 more feet into the reservoir. What we've determined is by extending this lateral, we think we can access up to 2 million barrels of oil equivalent. So very significant number for one wellbore. And that's obviously completing that longer interval with the acidization. So from an operational perspective, there's clear reason to go forward with this. We think we'll have substantially higher reserves than just producing the wellbore as is today. So we're firing on all cylinders right now, getting prepared to go in and complete this next portion of the lateral.
And Colin, how are you going to fund that part of it?
Yeah, well, that was, clearly a big part of this exercise was going through and determining the costs. It will cost about $7 million to do this. And we ran a process with non-operated wellbore investors to determine if we could bring in a partner. Our board deemed it prudent to bring in a partner here. And just for context, in our Williston assets, we are the non-operated investors. We own pieces of different wellbores. This is a very common way of investing in the industry in the U.S., where wellbores get carved up into pieces. In this case, we've found a non-operated investor we've worked with very closely in the past. They're comfortable with this asset, and they are going to be funding all $7 million for the lateral, at the end of which they'll own a stake in the wellbore. We'll continue to operate. We'll enjoy a majority of the economics from this. So it's a very clean and efficient way. The most important thing for our investors to understand is we haven't given away any other form of upside with this other than the interest in the wellbore. So there's no option over remaining drilling or remaining acreage. There's no exposure into our common equity. So from our standpoint, it was really important to find the right investor who was interested in the wellbore only economics, and we feel like we've done that. So we're in the documentation process right now. We'll have more to announce on it soon. We haven't given much detail on it because it's commercially pretty sensitive at this point,
Sure.
But you'd understand that, the most important thing is it's wellbore only. It will fund all the costs of the lateral, and the investor will be an owner in a piece of the wellbore after we've closed.
Okay. That obviously is going to keep a lot of your time usage very, very heavily. But you've also got other things going on with the company as you head into the fall and into 2025.
Sure. I mean, obviously, getting the wellbore deal documented and signed and completed is incredibly important.
Yeah.
At the same time, we're
Yeah.
preparing operationally to drill this lateral. So, procuring a rig, for example, is right up there on the list. We will drill this in the winter. It'll be at the end of by the end of this year or early next year. We've drilled in the winter in the past year. Sometimes it can cause delays with storms, but we have no problem going out there and executing this part of the lateral in the winter time, particularly because we've gone through all the overlying reservoirs to get down into the wellbore already. So timing will be dependent upon rig, but we're very close, and we'll be making announcements in terms of timing and process going forward. Obviously, the rest of the business is still getting our attention as well, and we're continuing to grow it and look forward to the next few months. It's an exciting time for us.
Absolutely. It means we're going to be talking a lot. Colin, thank you so much. Good to catch up with you and get an update on what's going on. And we look forward to our next conversation. Okay.
Thanks, Steve. I appreciate it. Take care.
All right. You as well. Colin Harrington, the CEO of Zephyr Energy.